it'll hold, or are we looking at further price gains when it comes to clients on our end? Hello everyone, Monty here, market analyst on IG with another technical cheat sheet video. Though, given it's TCS, we're going to have to start with technicals. We will get to sentiment later. We're going to have to take a look at key technical indicators in order to formulate a subjective overview, which I know at the times we can agree to disagree, but that means we're going to look at more than one overview when it comes to the daily time frame and prep those strategies, whether you're a conformist or a contrarian, as well as levels that have narrowed from the last time we did a TCS video on WTI when there was more geopolitical risk premium and in turn more volatile intraday moves. Also going to be where traders stand, where they're actually still the same. They were slight by the last time we did the video, 53% clients on our end, that is, they start this week off at 53%, but there have been some significant moves in between. COT speculators, by the way, heavy to the buy side last time around, now pushing into extreme buy territory. And then I know it's technical cheat sheet, which means you got to look at technicals, but doesn't hurt to look at fundamental considerations, especially those that might throw a wrench into some of those key technical indicators. So let's go ahead and get started with those key technical indicators. Price above all its main short and long-term weekly moving averages. You can take a look at the chart courtesy of IG's platform, and you can see that in the case of some of those long-term moving averages, only just above. Won't take much to tilt that one. When you take a look at the other key technical indicators, neutral. Yes, the plus DI above the negative DI, but not enough to really say that this is a positive DMI. ADX not in trending territory, nowhere near. In fact, RSI not far off the middle, and so too when it comes to price with respect to the Bollinger Band. So you take a look at this, you take a look at how easy one of those green technical boxes can flicker, and you go ahead and take a look at this. You go, you know what? This overview was cautious consolidation before, still is now. Doesn't mean that we don't get mostly controlled mini trend moves on the weekly, and it doesn't mean that there can't be some follow through when it comes to some of you trading the DMI crosses on the weekly time frame. There have been cases where there's some, but it's been limited follow through. But at least it has generally worked compared to those periods where it was treated as sort of a false signal. And that means that for those of you that are in the conformist camp, you're looking at added caution whenever you're trading off of these levels. That means if you're going to the first resistance, you're selling only after a significant reversal. You wait for it to break by a significant amount if it comes back, and then afterwards you go to entertain a short. And when it comes to the buy side, when it comes to first support, waiting and entering only after a significant reversal. Those of you that are in the contrarian camp, though, you're going to be going for breakouts. I do want to say that levels have narrowed considerably, which I'll get to in just a moment. And when it comes to those of you that are going to be trading breakouts, contrarians, whether you're going for a buy breakout off the first resistance or a sell breakout off the first support, it's going to require a little bit more patience on the weekly compared to, say, the daily, where whenever you have those mini trend moves, it's been a relative plus for those that are breakouts, even if you've had to wait an extra day or two. But that has been, essentially, you have to be less patient there compared to when it comes to the weekly time frame. Speaking of those levels, by the way, RSP, or relative starting point to the first resistance, before last time we did this video, when we were a lot more geopolitical risk premium being priced to the market, a lot more plenty more volatile moves. It was $3.11 the gap, and it was $1.55 between the first, whether you're looking at the first resistance or first support, and the stop loss or SL for the first resistance. Now it's gotten significantly lower, $2.39 between the RSP and the first resistance. So we're kind of phasing out slowly that spike in volatility on the weekly time frame. So to the daily, which I'll get to in a moment. And when it comes to the first to the SL, you're looking at a gap of $1.19. So what about the daily time frame? Now here's where it gets a little bit conflicting. Price beneath all its main short-term daily moving averages, above all its main long-term ones, 100 day moving average not that far off. So both of them can flicker with relative ease. A DMI that, yeah, just like the weekly, plus DI above the negative DI, but I tell you what, not enough of a margin to tilt that one green. And ADX that by the platform's calculation in trending territory, but falling out of it, moving down towards, it's around 30, but moving closer towards 25 and 20 by another calculation, has already fallen out of trending territory. And RSI and Bollinger Bands, both of them considered neutral. You look at this and you think to yourself, all right, this is going to be something consolidatory. Maybe it doesn't really look, it doesn't look bullish. But when it got to 83.84, there are a lot of those that the bulls were getting very hopeful that we might be seeing further price gains. Now, at the time, on both IG's daily market report that I sent out on the weekly, it did not shift to bull average. It stayed consolidation volatile, going for breakouts off of these mini trend moves, just like before. And by the way, just like before when we did this months ago, it was trickier to classify. It remained bull average versus consolidation volatile. It clear after pulling back, a lot of you are probably going, okay, it's not bull average anymore. If we're looking at the key technical boxes on the daily time frame, they're mostly neutral and they're conflicting where they aren't. So this can't be something bullish or bull average. And a lot of times when you want to go for a bull average, you're relying either on a channel or borrowing from the weekly, which we aren't in this case. But if those of you do consider it, and there might be some fundamental considerations that might push you towards bull average, that means that you're going for a buy breakout off the first resistance if you're in the conformist camp, and buying only after a significant reversal off the first support. But when it comes to consolidation, volatile breakouts, we're going for breakout strategies, whether buy breakout off the first resistance, sell breakout off the first support. But it's always been a matter of, struggling intraday if you're not getting that follow through versus mini trend moves out. This is what you're essentially relying on for breakouts to do well. And there have been periods where you've had these mini trend moves up, mini trend moves back down, and that kind of has helped. The moment it really starts to consolidate, that's when breakouts are going to struggle, but it needs to consistently oscillate to give contrarian strategies the outperformance. And we talked about this before, making a move prior to the first levels up towards if it's seen as a center of gravity. So if you think the first resistance or first support, fine, it might hold or it might be a little bit of a breach, but I want to go for the act beforehand and sort of take that move all the way up, and that might give me a little bit of a margin just in case it does come back down. I can actually get out and still manage to secure some gains, or at the very least avoid some loss versus buying at the first resistance or selling at the first support level. When it comes to contrarian strategies, as I mentioned, you're selling after a first resistance, you're buying the first support after a reversal, and those are the strategies. Like before, those are the contrarian strategies if you anticipate a sort of hold at these levels. What about when it comes to levels? And by the way, that needs mini trend moves. That needs mini trend moves when it comes to breakouts again. But before, it was $1.10 the gap between RSP and first resistance, 55 from the first to the SL. Now it's narrowed as well. So just like with the weekly, we're seeing a narrowing, 87 cents for RSP to first resistance, or even to the first support, same thing, 87 cents and 43 cents when it comes to the first to the SL. Though keep in mind, if you're initiating at earlier levels, or if you're not working exactly at those levels, you got to change both your stop loss and your take profit accordingly to make sure that the risk management matches up. So what about when it comes to sentiment? Now here's the thing, IG client sentiment, last time we did this, there was a lot happening in oil. So big move, oil prices went up week on week, and we saw clients on our end drop from a heavy buy 67% to slight buy 53%. COT speculators, they were in heavy buy territory and they were taking up from 71 to 73%. What about now? Where are they now when it comes to clients on our end? At the start of this week, just like last time, starting at slight buy 53%, though they've been very close to the middle and they shifted from a slight sell 51%. We are going to show you where that happened and why that happened in just a moment when we plot it onto the chart. What about COT speculators? They were heavy buy. The last time we did the video, they pushed into extreme buy territory and they are hoping for further price gains. Let's go and map that onto the chart now. The dotted lines, that's left side as percent long. So if you see the green dotted line at around 79 here at 79%, that means they're 79% buy, which means they're going to be 21% sell. So they're in extreme buy territory. And I put this, this is for your convenience, this red dotted line here, that's the 50-50 line. Whenever you see the blue or green dotted line above, and you've seen them above throughout most of this period of time, that means they're majority buy. Whenever it drops below, they're majority sell. So let's go ahead and start with the COT speculators green dotted line. They were extreme buy territory. You have this portion that are going for momentum. That's always going to be there, not just in oil, and plenty of other products. They obviously, when prices went down, late last year, you saw them get out, kind of held around here and stayed in heavy buy territory. And then when prices went up, you saw them come right back in again. Prices came down. They took it down, but not as low as they took it before. They actually stayed giving a bit of a margin. And interestingly enough, at these levels over here, you saw them actually start to increase and buy right away. They were looking to position for further gains, and indeed they got it. So that was, kudos to them. They got that one right. And now they're in extreme buy territory at these price levels compared to when they were in extreme buy territory when prices were all the way up here. So let's see whether or not they're going to hold on to this attitude. And of course, you can always take a look at IG's weekly market report, daily market report, as well as weekly sentiment report to get details and commentary. I do put that in the IG's weekly sentiment report every Monday if you are looking for commentary in terms of what they've been doing, how many lots, where are they in gasoline and ULSD and natural gas, so on and so forth. But let's take a look at client sentiment and what they've been doing over the past several months. And what happened is that, when prices went up, there's a bit of range trading happening here, but generally speaking, like with gold, looking for a chance to stick to the buy side. So whenever price pulls back, they're usually quick to go back in and buy, and you will see shorts get out relatively quickly in that regard. But you see that price comes down over here, you see them start to buy, and they take it all the way up and they start to match COT speculators as price dips, and they're buying on the dips, and they're going into, they reached extreme buy territory at one point, but heavy to extreme buy. They timed it right, they managed to buy, and then of course they got out relatively quickly when it comes to their long positions. It moves up and you see them come back down and you see them go over here. I'm going to go ahead and zoom into the daily time frame just to see you guys exactly where this started to happen and how they got close to, this is the middle over here, the 50-50 line, where they start to shift back and forth near the middle. But you see that went up, you saw some of them get out. The oscillations is usually what causes and a lot of those trend traders to get impatient. So when you get the next move higher, you see them start to get out. Longs get out because they're trying to range trade it. And here, this period right over here, this is where you had quite a bit of range trading opportunities. You see a lot of it go back and forth because they start to get enticed into range trading. They go, okay, market's going to stabilize over here. And then bam, this move right over here takes them down to the middle. And since then, generally speaking, close to the middle, though I will say if we do get pullbacks back to over here, you'll probably see them get closer to more moderate majority buy levels instead of just a slight buy territory. Finally, when it comes to the fundamental note, we got those monthly oil releases last week. EIA forecasting a deficit next year, depending on whether or not OPEC Plus holds on to those, depending on their cuts and the expiry of their cuts. OPEC, generally speaking, having that more optimistic forecast and holding on to those optimistic forecasts on anticipation of demand. And then, of course, that big divergence always between OPEC and IEA. It's always that tussle between their forecasts. OPEC seen as optimistic, IEA seen as quite pessimistic, and whether or not the two of them will that divergence will remain. You also had those weekly inventories. We're going to get them again. You get APIs on Tuesday night, depending on when you're watching this video. But Tuesday night you got the API, and then Wednesday evening you've got EIA's figures. But only recently, I should say more recently, it's been a story of deficits. So EIA, there was that sizable 12.2 million prior 2 weeks back, and then the more recent figures was 3.4 million deficit. You go, okay, that's okay. Gasoline just 2 million during the driving season, all right, and then distillate was actually plus 4.9. Not the best narrative when you're looking at, or generally speaking, the market's looking at seeing more sizable drawdowns when it comes to inventories. And then, of course, there was that SPR, Strategic Petroleum Release offer at these price levels of 4.5 million. I don't think the 4.5 million really means much in terms of the demand itself. It's more about why are they putting the offer in at these levels. Before initially it was 67 to 72. Then no, wait a minute, it's going to be 79.99, which means around 80. And then all of a sudden we're getting these offers at these levels. Do they know something we don't know? Why are they offering at these price levels compared to we were expecting a bit of a lower level? And I think that's kind of the narrative that people are relying on more compared to just a matter of they're putting in a demand for 3 million or 4 million barrels, for example. And that brings us to final items, and that is U.S. economic data, pricing versus the rest, in the sense that you want lighter pricing data because that boosts the chance of seeing rate cuts versus when, I get it whenever you have worse data, say when it comes to manufacturing or the U.S. consumer, that could also, or the labor market, that could also boost rate cut likelihoods out of the U.S. Federal Reserve, but not for the right reasons. The better reason is whenever you see lighter CPI readings like we saw last Thursday. We did get Chinese data this morning, which, let's face it, disappointed. GDP was a miss. So too retail sales, home price, HPI, new home prices for year-on-year contraction worsening. It's not exactly what you want to see. And everyone waiting for that sort of stimulus package, and they're hoping that maybe instead of just getting some basic reforms, maybe there'll be something a little bit more on offer this week when it comes to the third plenum. And finally, the geopolitical risk premium, which as traders you're going to have to keep noting. I know it's dropped. We're not seeing as larger swings. It's not being factored in as much, but you never know when that returns. And when that does, you're going to have to tweak levels as well as strategies in the overview accordingly. So that's about it from our end. Do hope you enjoyed this video. Good luck out there.